All right, all right. So, hi everybody. This is the first time you're seeing this video. My name's Johnny, and Johnny Lee from Johnny Lee Trading. And here today we have a really excellent video on how to backtest. Now, I know I've received a lot of questions from you on this, and we're gonna go deep into a few of the secrets that I use and I have used over the past couple of years, and I've learned over the past years to use in order to really sear and backtest appropriately. In my mind, there's not a real shortcut around it. You need the experience. You cannot let some software say, hey, this works 80% or 60%, 75% of the time, because those numbers don't really make any sense to you, right? You believe what your eyes can see. We'll touch upon that in a moment, and we will go through. So we're going to go through a couple of things and help you at the end of this session. If you go back and rewatch this, I'm going to give you a lot of tools, and we're actually going to go through one of the simplest strategies that Michael, otherwise known as Inner Circle Trader, uses. And one of the ones that I think is one of the simplest ones for newbies who are getting into Inner Circle Trader. I use that term lightly because it takes a lot of work, but let's go into some of the details. Listen, take notes, and rewatch this, pause this when you need to, because we're going to go through a few few examples and theory. So let's go over to that chart without further ado. So we're going to talk through how to backtest a strategy, and we're going to talk through a strategy at that too. So listen closely, as there's going to be a lot of really good gems that you may or may not have already tackled. If you're seasoned ICT, you know everything. Disregard this video. You don't even need to watch this video. You're an expert already. Who the fuck cares, right? So anyways, let's get started. So at the end of the day, the biggest thing you need to train your brain is be willing to do the work. Do it yourself. Go back on your charts. Think about how you're going to test your strategy, what you're looking for, pay attention, journal, do it yourself. Make sure you're willing to do the work. This is the number one thing that it's one of the best ways to gain experience without having to blow accounts and gain confidence in the actual thing that you're trying to backtest, right? If you can't replay live charts, then this is the next best thing. And it is absolutely equally as effective. If you hear people that say that, hey, backtesting a static chart isn't effective, I need to do it live and demo, sure, there's some psychology to that, but it's not that much different if you do enough backtesting. You have to really be able to pay attention to it. You won't understand what that means if you're just new to trading until you do it. Trust me for now. Results will come over time, though. They're not going to come in, 3 months. They're not going to come in 6 months sometimes. It might take 12 months, 24 months, 36 months. It just all depends on how much focused time you're willing to give in studying these type of concepts, okay? Consistency, discipline, and experience at the end of the day are the bedrock for you becoming a successful backtesting trader. Somebody that looks back and finds evidence as to why their strategy will or will not work. What percentage of the time does it work? So what we're going to do today is we're going to go through a few examples of one of ICT strategies that honestly, I wish I would have seen this earlier. I think it's a fantastic strategy. I think it's one that anybody can pick up. Given that you've done the work to study the core content of ICT's 2016, 2017 models, and you've been exposed to maybe the 2022 model. You don't have to. 2016, 2017 content is enough, but sometimes it can be tricky, so just keep that in mind. So let's talk about price action model 12. We all call it PAM 12. So first thing is you need to go to Inner Circle Traders channel, look up, study the 2016 and 2017 content first. That's his core content. And then also take a look at price action model 12. That's in his charter level details. Do not look at price action model 12 unless you've gone through 2016, 2017 content. It will not make sense to you. If you try to trade that before you've gone through it, it will not make full sense to you. So generalizing, there's a lot of subtleties here, but generalizing, this model requires that one, you identify a daily draw on liquidity. Where on the daily chart is price likely to go in any given day of the week? Once you identify that, you need to identify core order blocks, either on the daily time frame, could be on the hourly time frame as well. As long as it's higher than the 15-minute, you usually can find something there. You want to look for fair value gaps to form. After it's hit that key order block and expanded away from it, there's typically going to be fair value gaps form. So you want to look for those around the 15-minute time frame, and drop down to a lower time frame. Maybe it's a 5 minute, maybe it's a 3, 4, 3, 2, 1 minute chart. Look for a fair value gap that's formed in the direction of your draw on liquidity on the higher time frame charts, and then target those key areas of liquidity, whether they're short-term lows, relative equal lows, relative equal highs, short-term highs, internal PD arrays, external PD arrays. There's a lot of draws on liquidity that you can aim for, lots of different ones there. So let's talk through some of those, okay? So what we're going to do is we are going to take a look at the charts here, and in order to backtest, there's a couple of things that you need to be able to do. I would recommend that you find a way to look at 2 time frames so that you can see how time is passing between the two. So in this example here, you see me with a daily chart here of micro NASDAQ, and then you see every time I move my mouse, it's following along with the day that I'm looking at the time, right? So what we want to do is on this, so we know that price has been going up and up and up and up. So we'll take a look at some price levels in the previous 60 days. And let's see. So we're going to look for order blocks, like I mentioned. If you don't know what this is, go back and study. But we are going to mark some of these with big black lines so that we can look at the charts later. I like this here. There's an order block here, bullish order block here, and we come back down to it. So we'll take a closer look at that. And then I see another one here, and I actually like this one the best. But I have an order block here. We've got a nice big fair value gap that we can potentially tackle. If we miss this one, we can come back up to this one, right? So we're going to take a closer look at what happened in this range and what happened in this range, and how we might have been able to look for longs within this trending upside effort here. So let's take a closer look at, what day is this? 2/21. Okay. So I'm going to head over here. So we want to go back to 2/21. Where's that? I might need to turn off global for a second here. There you go. So we know that these are 2 order blocks that are bullish order blocks. So I want to go back to February 21st. We're at close here. February 2nd, February 15th. So you go back to February 21st, right? So we can kind of see that after the New York, this green session is the New York session, by the way, 8, I think it's 7 o'clock to 9:30-ish. So we can kind of see this same black line corresponds to this black line over here. That's our bullish order block. So we can see that we return back to this bullish order block here. On the 15-minute, we also see that we've, let me go back to 2/21 on this one. There we go. So on the 15-minute chart, we see that we blasted down through that here, and now we've created a fair value gap to head higher, which displaces above this short-term high. So we know that in this case, we think prices can continue higher because we did not break below this and stay and close below that. What do we see here on the 15-minute? We see this go higher, right? If we go down to a 5-minute chart, we see this honed in even more so. We see this short-term high being broken here. Price doesn't come back to it until a little bit after the bell. And I think this was an earnings type run. So this would have been really difficult to take. But nevertheless, if you had limit orders here, there's a good chance you would have been able to take this. Now, would you have taken it in real life? Probably not. But it does show you that price trades down to this fair value gap after trading down to this bullish order block, right? So we see that there's a fair value gap formed on the lower time frame. Price trades back down to it, and then you see this take a really nice run going into the Asia session. Likewise, so that's the first example of a higher time frame that you drop down to a lower time frame, 15-minute. You confirm that it's heading higher. You look for a fair value gap to form, which it does, and then you could probably take a order somewhere in here after you drop down to a lower time frame, and you see that there's one down here. Now this all means that I was looking for a bullish run, right? So let's say I missed that one. Couple weeks later, there's one here as well. And remember, on the daily chart, they might form a little bit less. Nevertheless, you can actually find them on other down close candles here on the way back up. You can actually find them. They trade down to it. It's a little scarier, but they still do trade upwards, right? But nothing beats a really solid one down here. So now we see that there's another one on February 20th that forms. This is revisited when we get down to March 15th on Friday. Now, I liked this because I knew there's a daily fair value gap up here as well. So I knew it was going to target coming all the way back down to these relative equal lows. But all I was looking for in this model, I look for this bullish order block here. I look to see if there's a fair value gap formed on the way up. There is. I look for a return back down to it. And I do see that there's relative equal lows. So I think that this is a high probability that we'll trade back down to this bullish order block. And what do? On the 15th, we trade back down to it. Now, what will happen next, I don't know. But we can use that as a potential draw on liquidity to trade the way down. If we're stuck up here, we see price starting to reverse. We can use that as a potential draw on liquidity as well. So let's look at these past few days as another example on the short side. So you saw a couple examples on the daily chart of this model moving to the upside. Let's take a look let's see if we can find some on the hourly chart a little bit closer, something that maybe is a little easier to digest. Okay, so let's see. So we've got one right here. I can see this pretty clearly. It doesn't go all the way up there, but it does go to the midpoint of this. So let's mark that out, right? So we have this bullish order block here on the hourly chart. We mark that out. And then over here, we see that we don't have too much here. Don't have too much there. We might need to drop down to a 15-minute chart. Let's see if there's anything down here as well that we can mark out before we go lower. Let's see. I have that hourly one. We see a return down here. Here's another bearish order block that we clearly see movement away from. So let's try and mark a 15-minute example here too, right? So we're giving a couple examples here, a 15-minute and an hourly example of where price had traded to a bearish order block. And in fact, I can even use this lower one here. That should be fine as well. These two candles consist of a bearish order block, right? So we'll look at the hourly one first. Here, this midpoint of this wick, this whole thing is a bearish order block. So we want to give grace for this to head to at least the midpoint of this wick, which it does. So this black line that you see here on the side, that is something that, and we'll take off of global. So we want to take a look at 313 over here. And let's take a look at this. So this black line here correlates to this black line here. This is a bearish order block. It created what? A fair value gap right here, right? This is price action model 12. We see a price action on this hourly chart. We see this start to head up into this area here. What happens when we touch it? We start to get a little bit further higher. We see some failures here, and then we see it drop in hindsight, right? Let's drop down to a lower time frame, like a 5-minute chart, and see what we can find. So after we take that order block, we know that where there's an order block here, we know that there's some sort of fair value gap that probably formed on the way down. So for us to be able to see this, we need to go back a little bit over to that previous day to look and see if we have a fair value gap or something here that we could target, right? So right here, we don't have a lot of fair value gaps here. Yes, it does come all the way up to here, but I think that's a little bit too far up, as we do have this bearish order block here as well. So one could target this this area here. One also could target this up wick. Now, wicks can be treated as fair value gaps as well, especially when they're above a short-term high here. So let's assume that we found our 5-minute fair value gap, which is price action, going all the way to our day here. And let's go back to present day, the 13th, over a little bit further. There we go. So here we are back on the 12th. Here's the 13th. So we see price head up into this previous fair value gap. Now, again, you need to be going through the core content to understand why that's a fair value gap. But trust me, for now, you would have gone back to look for a fair value gap on a lower time frame. And now that's our fair value area. Even on a 5-minute, we can see that we traded up. Actually, let's assume that we were, we weren't early risers. If you're an early riser, you could have hit this one. But even so, we see that we have, a fair value gap here. This blue section, we trade to it. We can start to take shorts here. We see that it respects this fair value gap here as well. Institutional order flow, entry drill, and we head down. And then during the 7 a.m., we see it head back up to this area, fails. We see this fair value gap form right here. And now you have price action model 12. Balanced price range here. We see it come down to it, heads into the middle, fails. Now, if you missed this one, you could also see that there's a fair value gap here, a bearish order block here, and you can even take this fair value gap as well. Either one of these would have been totally fine to take. As you saw, price traded down well below this balanced price range, came back up to it, boom, low end of this price range, fair value gap. This is your PAM 12. So that's on the hourly chart too. That was on the hourly chart. Now, remember, we found another one here. Let me take off global so we're not doing us here. We saw another one sitting here, right here on a 15-minute chart. So before we had this drop, right, we saw this bearish order block. We saw it formed this fair value gap. And what happens? Price trades up to that fair value gap, trades up to that bearish order block, begins to trade lower here. And once it trades to this segment of this fair value gap, remember, wicks are treated pretty much as fair value gaps as well when they are uncontested. We have one pass through. We want to come back up once more. It closes in the rest of this fair value gap that's down here. We can drop down to a lower time frame here, and let's consider this to be a now let's do this. Let's make it red so you can see it on all charts. So we see the same red box here. You see it over here. And we do see that price eventually comes back up into the rest of that fair value gap coupled with a bearish order block. So you can start to go short here, right? So on a 5-minute, we know that there's a fair value gap here. So we know that it's possible it could come up to here, but this area is coupled with this bearish order block. So this is a really nice 5-minute SIBI. So this is what you would have had on your charts for price action model 12. We see evidence that it trades up to here. We see evidence of movement lower, higher, displacement lower, coming back up into another fair value gap. So with a price action model 12, within a price action model 12, you can enter short here. And what happens? Immediately, right as you enter a fair value gap within a fair value gap, that's when you get some explosive action. Then there's another one here that you can also take pyramid entries into. And you see that we've got quite a move for the rest of that day on the 14th. Beautiful, beautiful shorts there. And a great example of price action model 12 going from higher time frames, whether it's 15-minute, hourly, daily. I showed you 2 examples of a higher time frame moving down to a lower time frame for entry. On a daily chart, I showed you 2 examples going bullish. On the hourly and 15-minute, I showed you 2 or 3 or 4 examples. Notice how there are far many more examples on the lower time frame charts than showed up on the daily charts. But the daily ones are where you see much, much, much higher probability that you'll get a reaction at those times, right? So if you don't understand what I just went through, it is fast. It takes time for you to really look for these examples. We only look through 4 examples, 4 or 5 or 6 examples of this. If I were to truly backtest, I would go back and I would just look for, on this whole run up, I would just look for like every single one of these bullish order blocks. I would mark out, see if we had traded back to them, see if not, was there a lower time frame one that we did trade down to, whether it's a 4-hour one. You know, here's the 4-hour chart on the way up. You can see there's plenty of other bullish order blocks that we traded down to identify this model, because this model, remember, you look for a bullish order block, you look for a fair value gap to form, you look for a price to return back to that fair value gap, you look for a price to tell you it's going to head upwards, and then you look for it to reach a terminus, some form of draw on liquidity, some PD array on the way up to that draw on liquidity. I would go find, let's say I found 2 examples here. That's not nearly enough. I would have looked for at least 20, and then even then I would have needed to look for even more. So let's go back to some closing thoughts on this. Okay, so some closing thoughts on this, right? Whatever you think is enough examples to backtest, you need to 10x that at least. If I was looking at 20 examples for just the bullish side on the way upwards, I would need to go look for 180 more examples so I could hit 200 examples seared into my head, showing me that, hey, this price action model works. And here's the reason why. Here's what I was looking for, and here's where I found it to be working. Here was what I was looking for, and here's why I find it to not work, right? So you need to really, really internalize that, hey, I'm going to need to put in the work. I mean, there's no other question about it. If you're only backtesting 5, looking back maybe a few days, finding a few examples, then thinking, oh my God, I got it, I can see everything, you're probably not going to do too well in this. But if you're willing to put in the time and efforts to really look back at one price action model, one segment, whether it's bullish or bearish, you don't have to look at both sides, but you do need to be prepared to look at one side, study that, and then look at the other side once you're done, study that. Really, that's about it. I mean, that's as simple as I can make it. This is going to be one of those lessons you need to go back, pause, go back in your charts. This is the June contract of 2024 micro NASDAQ. So a year from now, 2 years from now, yes, the contract is going to change. The material itself, the theory, is not going to change. You can always go back and look at what this contract looked like in TradingView. They have those. You can go back and look at NQH, or I guess we're on NQM probably right now, or MNQ, whatever it would be. So you can always go back and look and find it, or look at it yourself, right? Once you develop this type of backtesting muscle, you're going to do that with any new piece of information or strategy that you find. And it doesn't have to be an ICT strategy. You can do candlestick patterns. You can do like the strat. You can do, if you're a strat trader, you can do that. If you're a, Bollinger Bands and, Ishimoku cloud trader, you can do that. If you're a Heikin-Ashi candlestick pattern trader, you can do that. But you need to go back and put in the reps to do this and journal these as well. So in closing, this is what you need to do. There's no way to get around it. If you have an auto backtesting software, fine. If you want to trust those results and you have no clue what underlying code actually goes back and tests those things, you're not going to gain that really firm experience that you need internally, that your eyes need to see, and you won't be as successful, to be fair. You might have the unicorn that is successful, but you will not be successful, in my mind, if you don't get that experience and internalize it inside. So if you made it this far, thank you very much. For 2024, I have lowered my schedule just because work has gotten insane, and I will try to trade from 7 a.m. to 9 a.m. on Wednesdays and Fridays. I will not be on Mondays, Tuesdays, and Thursdays. One, because I have to go physically into work Tuesdays and Thursdays, possibly another day of the week soon. And I will be online at roughly 9 p.m., sometimes a little bit earlier, 8 p.m. Eastern on Sunday, to do weekly prep for the week, see what we see what we don't see what we can look for of price and where price might go, right? So we are always on around that time on Sunday. So hopefully we'll see you on live. And thank you very much for tuning in. If you have questions on backtesting, study this lesson. I guarantee you, this is literally all you need to do. I mean, if you can find your strategy, whether it's from a book, whether it's from ICT, whether it's from some other place, doesn't matter. This is going to teach you. Go back through this, watch this video again, pause, listen to segments of what I'm looking for and where, especially if you're trying to practice price action model 12. It honestly is one of the easiest ones that I've seen yet. It's simple to understand, but you need to make sure you put in the time by studying the 2016 and 2017 charter content first. It helps if you've studied the 2022 model. It's really similar to that. And I think even one of ICT's sons uses a version of this. You don't have to use Cameron's model. It's a different model, and it's probably really difficult for a net to new trader to do, nor would you probably have the time frames that he trades on, but it works. Put in the time, go back and look at this. It's insane how many times this works. But yeah, I think that's it though. Hopefully you enjoyed this. If you did, please give it a like. And if you want to see more, just subscribe to me. And if not, appreciate you listening in. And yeah, we'll catch up with you on the next one. So hopefully you have a good time backtesting, and hopefully this helps you understand how to backtest properly. You need to journal those All those examples would be individual screenshots in some sort of journal online, whether it's OneNote, Evernote, whether you use Notion or Discord or whatever. Just take a screenshot of that. Have different time frames. If you can only look at one time frame at a time, take a screenshot of the daily chart. Here's what I was looking at. Take a screenshot of the hourly chart. This is where it looked like on the hourly chart. This is what it looked like on the 15-minute chart, 5-minute, 1-minute chart. And that would be one example. Then you go find the next one. You do the same thing. You do that 200 times. Guarantee you, when you do something 200 times and you really study, you will start to see it very, very easily. But you have to put in the work, right? So with that, take it easy, and we'll see you on the next one. Hope this was enlightening, and I hope this was useful, and we'll catch up soon. See ya.